we ran a hypothetical backtest on the Tesla using 4-hour chart, 100 trades, and open up TradingView platform, tradingview.com. Then at the top of the TradingView, hit indicators, and in the search tab, type in Ichimoku Cloud and add this indicator to your chart. The Ichimoku looks like someone spilled spaghetti on the chart. Too many lines, too much noise, zero clarity on what's happening with price. But watch closely, we're about to declutter it completely and make it easy to read. So here's the key. The only part of the Ichimoku we need is the conversion line, also called the Tenkan-sen. Increase its length to 27. That smooths out and makes it more reliable for observing real market phase. Turn off the baseline, lagging span, and span A and span B. We'll keep the cloud just to visualize direction. Look at this hypothetical 15-minute chart on the gold. Let's be crystal clear before we start. This video is purely educational and it's not a financial advice. Every example you see is a hypothetical backtest, not live trading. You'll see just the conversion line and the cloud. Simple, clean, and easy to interpret. When the cloud is green, the market is bullish. And when it turns red, bearish pressure dominates. And here's the catch most traders miss. The Ichimoku cloud shows short-term direction only. It doesn't reveal the underlying market structure or momentum. If you ignore a structure, you end up buying every minor pullback and downtrends, and that's where accounts get wiped. To fix this, we add a second educational indicator, the swing arm ATR trend indicator. This uses the average true range to map momentum and structure. It tells us which side of the market to favor, but here's the common mistake. Many traders use it on the same time frame they're trading. That creates too many false flips. Instead, set it one time frame higher. We're on the 15-minute gold chart, so use a 30-minute swing arm for a structure confirmation. Adjust the ATR period and the ATR factor to 10. That reacts smoothly to real shifts, not random noise. Now let's clean up the chart. Only the swing arm ribbon should remain visible. This gives you the market's main structure. Now you can even remove the Ichimoku cloud itself because the swing arm clearly shows the phase. And here's the real power. When the price action crosses the conversion line from below and the swing arm is green, you have a potential entry. A stop loss goes just below the last swing low or the swing arm band. Target a minimum 1 to 2 risk to reward ratio. Look at this hypothetical gold trade. Price crosses, confirms with green structure, pulls back, then moves higher. That gave roughly a hypothetical outcome last week. Notice the psychology at work, patience and rule-based analysis over emotion. You're not chasing, you're observing. This builds discipline and makes your framework repeatable. Now let's flip it to downtrend. Same rules, just reverse. The swing arm ribbon turns red, meaning the market structure is bearish. Ignore bullish crosses, they're traps. Watch the gold 50-minute chart again. Price crosses below the conversion line, confirming a potential sell. A stop loss goes just above the last swing high or the swing arm ATR band. Target again at least 1 to 2 risk to reward ratio. The brilliance here is simplicity. You're following a structure, not guessing. Emotional reactions vanish because your rules define the entry. It's the structure filter that ensures consistency. To show you how this hold up, we ran a hypothetical backtest on the Tesla using 4-hour chart. $100 trades and a 60% win rate. A profit factor of 3.41 and max consecutive wins 7, losses 4. And max drawdown of only 3.94%. A profit factor of 3.41 means every hypothetical dollar risk returned $3.71 when trades follow the structure. A controlled drawdown shows the proper stop placement and risk management. Keep your framework disciplined, no magic, just consistent, a structure-based approach. Now for the next video, check out this video recommended on the screen as a great simple trading strategy that can even work on the US stocks market. Happy trading!